All right, so good morning, everyone. I hope you had a great weekend. I hope you had a great morning so far. It's already shared. I just did. So you should see the share screen that you can open up, I guess. Got it. Perfect. So, okay, market's gapping down this morning. We'll have to manage our risk. That will be nasty, guys. So, yeah, we'll take a lot of stop losses. I'm kidding, sorry. So, yeah, I'm down 70% pre-market, right? So, guys, that's a good lesson, just to, and I think the goal today will be to not create FOMO, just to step back, just like we don't look at our P&L on big down days or like Friday with that shakeout. I think on the upside that remains true, right? So you want to contain your emotions from either side. Either it's from a big up day or a big down day. Mistakes and complacency comes from swings of emotion. So if you swing too high or if you swing too low, then it will affect your trading, and it will come with time. Don't worry. I used to be super euphoristic when everything was gapping up, but now I just have my system in place and I trust my trims, and it's just giving me a bit more confirmation that the market is strong and we were into something with that positioning, and overall just reinforce the fact to be patient. So yeah, we'll focus on the price action. The market is gapping up considerably this morning due to the AMD and OpenAI news. But yeah, let's focus on what we'll do, when we'll do, and just to follow that wave that just started. All right, so first thing first, let's review, as usual, the market. So, and once again, I'll be pretty quick this morning, but I want to show you something else, but pretty quick. And like I said, almost all of last week, price is above a rising 21 DMA structure. I don't overthink when we have reversals or even sharp pullback in that uptrend. That's just part of the game. So you focus on that rising 21 DMA structure, and you let your position either confirm the price action of the uptrend or stop you out if that's red flags and the trend start to weaken. But again, if we're above the rising 21 DMA structure, I really don't overthink any market analysis. Same thing, that goes both end in end. So you want to see both price above that rising 21 DMA structure, but you also want to see breadth expand and to confirm it with a reclaim of the 10-day moving average. And when the trend takes shape, then see it stick and trend above a rising 10-day moving average on the McClellan summation. And you assess where you are in the short-term cycle with either the McClellan oscillator and the breadth extensions. And what I want to show you is what we'll add to TradersLab. So this is basically the new main page. And what we did, and I'll really focus on that for short-term positioning, so a bit like the price extensions. We normalized the McClellan summation index and the McClellan oscillator. So what it does is basically takes the last 3 years of data and normalize it in terms of z-score, which is basically standard deviation during those 3 years of historical data. So right now you have the McClellan summation, which I use to assess breadth, expansion, and contraction. And yeah, we just hit the -1 z-score, so 1 standard deviation below the average. That's a pretty strong area of support and where some of the uptrend starts. Sometimes we need to contract more and make another wave down, but that was kind of a big contraction, big correction in the market. Right now we're making new all-time highs. So I like that spot. That was a logical spot to curl up and start to expand. And on the McClellan oscillator, those upside retests of the 1 sigma and 2 sigma, so 1 and 2 standard deviation, is not there yet. So we're only at 0.57 and 0.63 as a z-score for the McClellan oscillator. So when we see that expand and hit the 1 or 2 standard deviation, then we know that we're likely at inflection points, and it's very rare that we see those 2 standard deviation move. So it happens a couple times a year, and when that happens, then you know, a bit like the breadth extensions, you know that it's time to trim more aggressively, remove some names that have been lagging in the recent years, not year, but weeks or days. You just protect your downside. You start to reduce exposure for when the market get tired and breadth starts to contract again. So that's the game, and I will watch more closely this one, especially being normalized. And yeah, we have a few things to fix, but overall that's the new one that I'm really excited to use, especially being normalized. All right. So looking at the internals, again, we're still in that wedge on the credit spread. So we want to ideally see that break down from that retest of daily structure and not spike and reclaim. That's not what we want to see on the credit spreads. VIX still elevated. It just don't want to give away that structure. So watch that. If we have a gap and fade, that could spike the VIX, and maybe that's what needed to retest kind of those 20-ish area to really spark some more broad buying. But don't get me wrong, the market is pretty strong recently, but breadth remains pretty thin. The AI trade is very strong, and we positioned in that very well, so that's why we have great traction lately. But broader market is not that strong, so we have pockets of strength. It's really a stock pickers market, but yeah, if we see a VIX spike, then that could maybe spark some more buying in the broader market. QQQE, so we covered that. So we have that nice uptrend above that base area. We had that reversal on Friday, but we're still above a rising 21 DMA structure. Nasdaq futures, so like I said, we had that breakout, that higher low retest of daily structure. we had that range breakout, and Friday I shared that in my journal. I was seeing that as a retest of the structure. So failed breakout and a retest. We were retesting that downtrend line, that recent daily reversal just in here as well. Perfect retest of the reversal pivot. And yeah, today we have that AI news, and Nasdaq loves it. So we have recent swing high reclaim and likely reconfirmation of the uptrend on Nasdaq. So yeah, that's why I don't try to anticipate the end of a trend, overthink every move above the rising 21 DMA structure. I tried to anticipate so much in the recent years. Every downside reversal was the start of a new pullback, or correction, or bear market, and I was puking my position. And then the next day, just like today, everything gaps up. You have to chase. You're frustrated, and you just screw everything from there. So that's why we love being patient. That's why we love the panda. And just to be patient when price is above rising moving averages, breadth expands. That's in those times that you have to be patient and let your stuff work. Even if it's pulling back hard in the structure like Tesla, Palantir, CRDO, A-Lab, Friday. Yes, there was that news that helped, obviously. A bit of luck this morning, but that's the kind of patience that you need to put yourself in the right position to be lucky. All right, so let's review the portfolio. So yeah, a bit of green this morning. So A-Lab, I trimmed my 2R that became a 20R target this morning. So I'll take this one. Risk was pretty tight, so that's why the R multiples are a bit higher. But yeah, it's basically just retesting the base area, reclaim of the 21 DMA structure. So maybe it needs time to build from here. So I don't know. We're gapping up pretty nicely this morning. But look, if maybe we need to backtest the rising 21 DMA structure, we need probably to build that higher low in the next few days. So that's why I trimmed. I think we're in a good spot. Previous structure as well right here. So yeah, trim that one pre-market, and from there I'm really patient with it. I kind of took my 5R target because I canceled my 2R, so I will put that one in my runners anyway. So yeah, I'll track the weekly structure. Next one, CRDO. So pretty nasty shakeout with the market last Friday. Why I hold and that I held on Friday was because one, we held the low of the 21 DMA structure, but we never gave back the higher low structure. So we had that low, higher low, and we made another higher low right on that uptrend line. And the line in the sand for me was really that recent swing low. I was ready to see that being retested this morning or today, early this week. And if it was to be given away, then I would close my trade. But yeah, nice surprise. We're gapping up above the 21 DMA structure. And I have my 7R target around here. Shop following through on the weekly base breakout, ain't it? Gapping up above the low cheat range. PLTR, nasty gap, not a gap down, but nasty pullback into the daily structure. We held that structure, recent swing high structure right here. We held the bottom of the 21 DMA structure, so that's why I held my position on Friday. Now we're gapping up inside that range. So ideally, we want to see that hold today and start to build the right side once again after frustrating and probably shaking out around 10 days of buyers positioning. So probably that all the buyers that were trying to position in that perfect cup and all were shaken out on Friday. So that's good fuel. That's good fuel if the market and Palantir want to gap up and go. Tesla, same thing. 21 DMA structure pullback, held the lows, held the structure, and now gapping up right into that range. So not in a hurry. My target is still around 520-ish. Robinhood, nothing to do. I have my 7R target a bit higher, so let's see if we can tag that in the next few days. MP, small gap up above the 21 DMA structure. I still like how it builds that larger base, right? So we have that base structure right here, right? So I will be patient as low as we remain above those highs, above the 21 DMA structure. Ideally, we can even build a nice right tight handle. But yeah, that trade is de-risk. I'm going to be patient unless we start to break things. MP forming a double bottom. Let me see that. Maybe there's kind of an inverse head and shoulders, right? And that inverse cup head and shoulders, or a classic head and shoulders as a topping process, is just basic structure and price action that we talk about each morning. Look where that inverse head and shoulders comes from. So you have that head and those shoulders, right? And that's always the same price action that we look for constructive action. So you have that downtrend here, that pullback, and we're making lower highs and lower lows. So that head and that shoulders from that pullback structure where you are making a lower low. Then when you flip that trend, you start to make higher highs and higher lows. So that's the same thing that we talk about each morning. That right side showing that constructive higher low structure, which creates that right sand and shoulder, sorry. But that's the same pattern. Just a change in structure from a pullback to an uptrend attempt, which creates that inverse head and shoulders. And to follow up on your question, could be an ad. Yes, but I would look for, let me just backtrack this. I would look for MP for an ad, for maybe a micro higher low. I would look for some weakness on MP, to be honest. That thing is super hard to buy on strength. And that would be the kind of action that I look for an ad. this one as well, where it failed, but that's the same setup. Sometimes it works, sometimes it don't. But look for that initial burst, right, from the structure, and then that retest, and then that retest, and then that retest. That would be the same type of backtest action that I would look to add to MP. So AMD, I shared that in the journal. So just ignore the news that we got this morning. And if you were shaken out of your position on Friday, just go back and look if the price action was normal. Was it within normal distribution, within the normal price action cycle? Yes, it was. So we had that breakout, right? That's what we were playing. We had higher lows on the right side. We positioned really well on the right side just as price was starting to contract. We were really patient to let this play out. We had the breakout on Thursday, and then Friday came that broad tech shakeout. But did we give away some key structures? No, we were retesting the 21 DMA structure. We're retesting that range structure area as well. We were filling that gap. So there was a lot of confluence of a backtest, a normal backtest for AMD. So just learn to recognize what is normal, what is not. And if you have trimmed, the position is there risk or even not, that you have cushion, then those type of backtests should be seen as normal, or even some add opportunity. But yeah, just being able and practice yourself to recognize what is normal and what's not will really help you being patient with your winners, especially around your entry. A-Lab we discussed. Micron just gapping up once again, nothing to do for me. I'm still playing this on the weekly. And on the weekly we have that massive base breakout. So again, just trailing the 10-week moving average structure. Same thing for VRT. How to be bearish or thinking that we are in a climax and near the end for the AI trade, when we see kind of one of the best shovel in play to have that big cup and handle breakout on the weekly. So I'm not telling myself this is the end. I'm telling myself this is potentially very early in that bigger uptrend. So after a big breakout, after the first initial breakout, you're not telling yourself that this thing is done. You're being patient to catch this type of move. That's what we want to catch with those runners. And even if my runner is a bit below 10%, catching a 5 or 600% move, you'll have to trim again, because that position will be much larger by the time it goes extended. Oklo, this one as well, kind of that big structure breakout here. I'm trailing that of the weekly. Same thing for Snow. That's potentially a stage 1 breakout that we have here. Right, that was the structure on Snow. And yeah, I'm trailing this off the weekly as well. Warner Bros. No bid yet on the weekly for me. Them really like that chart, right? Of the weekly, we have an IPO base breakout and retest setup with that weekly RLO as well. So a lot to like on them. I'm being patient with this one, trying to catch the larger move with that runner. And finally, Nvidia. I'm still playing that of the weekly, but definitely affected by that AMD OpenAI news this morning, because obviously if AMD is taking market shares, then it means probably less sales and profits for Nvidia. But let's see how it stabilizes and how it plays out. But yeah, I'm only on my runners, so obviously tracking that of the weekly from now. If I use the weekly on AMD, it won't get to 5 ATR. 5R you mean? Or ATR? That's not the same thing, right? Okay, just before taking chart request, just want to cover the focus list for today. So first one is Oracle. So that's earnings delayed reaction setup. So we had that 21 DMA structure retest, that daily reversal that we basically retested on Friday. So you can play this pivot. So if we gap up and we retest that reversal pivot, that would be a nice entry on the retest of the daily structure as well. If not, I think that thing is solo in the pullback and have that AI tailwind that you can play this of Thursdays and Fridays high for a reversal as well. And the second name was AVGO. So obviously it's affected like Nvidia. So I would stay away from those names right now, because the news this morning kind of affected the projection and the estimates of those stocks. So by the time the dust has settled, we will know more where it goes and how they kind of reprice their stock price, etc. So I would be a bit more cautious with Nvidia and AVGO this morning. All right, so let's take chart request. Google. So I would classify that as kind of high tide flag. So you have that earnings reaction and initial pullback. So you have that two leg down pullback, that daily reversal. Looks a lot like ORCL, right? So you have that 21 DMA structure retest, daily reversal, reversal pivot retest on Thursday, Friday, and you can play this off Wednesday's high. But for me, it's not in my scans or in my focus list, simply because it's too extended from the 50-day moving average or the 10-week moving average, let's say. So for me, it's a bit too long-term extended on the weekly time frame. But you can play this as a high tide flag, like I said. Ideally, what I would want to see is a bit further pullback into the weekly structure area. All right, so if you have other chart requests, guys, or any questions regarding how to manage this gap up or everything else, now is the time. You can use the chat or raise your hand. Just to explain my game plan. So last week I was a bit active, where when I was able to take my trims early in the morning, I was looking to reallocate that risk, reallocate that exposure into newer stuff, because I was still seeing those leading stocks building their pullback structure into the 21 DMA. So for me in my head, and I was seeing kind of the McClellan just getting started. I was seeing breadth extension still being neutral. So in my head, I knew that potentially we're quite early, and that's why I was open to reallocate that capital into newer setups. But now if momentum kicks in, we see breadth extensions getting, even the short-term ones get extended and overbought, and we start to see that. Sorry, Matt is working on the app right now, so there's a new update. So yeah, what I was saying is, if I start to see the oscillator, McClellan oscillator, getting above one standard deviation, then I will start to not re-engage that capital and start to look at maybe trimming a bit more aggressively if my stocks are not yet at their target, but pretty close at the end of the day. I might take those trims right away manually. But yeah, my focus right now remains to trim into strength, and like I said, if I start to see that eating up, breadth extension eating up as well, then I will look to not take any new exposure and start to trim a bit more aggressively. The market was kind of setting up very slowly, so that's why it gave many days and weeks to kind of rotate into newer stuff, but at some point when we're getting those overbought ratings, then it's time to stop. It's time to really reduce that exposure and not take any new trades. So yeah, like I said, we were still seeing those 21 DMA structure retests, shop pretty early, MP as well, Joby just taking off from the daily structure, CRDO. So that's all leading stocks still in their daily structure. So when I see that, I know that there's still momentum to come to make those work. I know CRWV, it's a lot in a lot of Focuslist. It's not gapping up too much, so if you're able to grab that on weakness today, that would be a nice name to play as well. But yeah, so much still leading stuff right into their daily structure that you have to keep an open mind that we do have more upside coming. Yeah, Google we just covered, Luis. So for me, it's playable as a high tide flag, but I would not personally play this just because of where we are in relation to the weekly structure. So for me, I like to look at least 2 times ATR from the 10-week moving average. And if it's above that, it's kind of weekly extended, and I wouldn't look to position in that. All right, so no more questions, guys. So yeah, once again, game plan for me. Market picking up. We have that news, and we might get some early short-term extension or overbought reading. So no new trades for me. I think the good stuff really went like Wednesday, Thursdays of last week. So ready to be really patient. I have my limit orders for those de-risk trades. And if I start to see a McClellan oscillator getting overbought, if I start to see those breadth extensions being overbought, then you might see me trim a bit more at the end of the day, even if they didn't tag their targets. But overall, I'm only at 10% exposure, and want to be patient to ride that potentially larger trend that's taking place. So have a good day, everyone. As usual, I will be in the trading pit. I have some things to attend today, so I might be off around lunch, but otherwise I will be there for the rest of the day. So have a good day, everyone. Take care, and make sure to trim into strength if those stocks that you're in are extended. Bye-bye, guys. Have a good one. Bye-bye.